Hi everyone. Today is Wednesday, May the 28th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We begin with looking at the E-mini S&P 500. We see a very tight opening range this morning, and we fell below it and came into the opening range of May the 18th's low, at which point we bounced. So we're going to be looking at that 5,919 area as potential support. We've got a little bit of a trend line action event off of the lowest low that we see in the near term of May 23rd. That puts us at the top of this channel that we've been holding fairly well. Yesterday, we blew past the implied volatility measure for the day. That was at 5930-ish or so. Pulled back, tested it, and continued higher. And so the key there is if we preemptively take a short at this zone and it pulls back and then recovers that zone, the trade is nullified as the outside break on the end of the day. And so if we were looking at that at about 1 o'clock in the afternoon Eastern time, we can see that it held that level. And so the likelihood of it pushing forward, you'll see that happening more often than not. All right, now what do we see today? Top of the opening range, we had a little break, and now we're inside that opening range again. We have the Fed meeting notes, the minutes. They're going to parse through them today. We have a 5-year auction, a 2-year. I don't know what FRN means. So these probably not as useful to us as the 20-year, but the big thing came with Japan sort of price fixing, you might say. It's called really currency manipulation. They had a 40-year bond that did very poorly, and so they are thinking about setting rates there instead of letting the market do it. That caused a little wiggle, and so we're going to see what happens with us in this particular space. All right, coming in ahead this afternoon, we have Nvidia earnings, but let's take a look at overall trend mechanics. What is the current trend in the ES? We can see that our motion is in recovery off of the very big downward candlestick on pretty solid volume May 21st. That was the 20-year auction. And my suspicion is we're trying to get to the top of that. You can see that number is about 5946. If we cannot, it means that we fade to the north. So what are the traders trying to do? They are trying to short the top of the opening range. The bottom of the opening range should be where the traders will try to hold it if they're going to move higher. My suspicion is maybe we go just a little bit sideways during the course of the day, simply because we've got the juggernaut of Nvidia probably doing a lot to move markets during the day today. So up above 5945, that would be continued long action into 5954. Implied volatility move to the north is 5974. Intraday, the weekly is still close to 6,000. And of course, I do not change that, so we'll see how it works out. I set it up on the 5-day spread on Sunday night. Okay, so that being said, where could we potentially go long? 5919 is a fairly nice area to position long action if we're going to stay sideways. Could you do a stop sell order to enter the market short at the break of the low of the opening range at around 5936? Yes, you can. The stop would be at 5943. And the target, again, downward would be 5919. Lower implied volatility target move, 5906. All right, let's take a look at the NQ. Oh, before we leave the ES, trend is up. Momentum just cresting up, but fairly negative, right? It's flat to negative, so we're going to have candlesticks have a tendency to retrace each other. We're very far from the 63 moving average, which is something for us to pay attention to. Let's go to the NQ. Taking a look at the E-mini NASDAQ 100 futures, also very tight opening range. We saw tight opening ranges across the board here, and that usually means we break both above the opening range and below it. This has happened. Notice the pullback into May 20. The high of that opening range candlestick of the Globex is 21,414. That is right around where the market began to bounce. That would also make a good long if we're thinking about holding higher lows and higher highs. Higher volatility, implied volatility targets to the north, 21,627. I am expecting the long target to stall out at the wick created on May 21st. And so that number is 21,560. Could you take a short way up there? Yes. But with 627 up above it, I'd be very careful. And if it moved 10 points to the north, pulled back and held, we would continue to see upside pressure. Trend is up. Momentum a bit flat, suggesting that we will retrace candlestick formations. It is still by the dip, right? Lower implied volatility move target today is 21,337. You know, if we come into the opening range on the Qs at 21,480 and we hold that zone, it is a potential buy area that takes us into the higher targets. My thought would be, let the megaphone play out. See if we actually do come back lower and are able to take longs at the bottom of the range with that first area of support at 21,414. Chart looks pretty choppy, but we are outside of the range of yesterday. Slipping back into the range of yesterday makes things a fair bit choppier. And so, you know, if we take a look at those volume formations, where the high volume event here on the hour, it's still showing 21,414 as a potential bounce zone. If the traders that went long here at 21,414 start to watch that slip, they'll be on the back foot and they're likely to sell into deeper support, which would be the lower edge of our implied volatility move at 21,337. Do I think we head lower than that? Probably not. My thought is, let's see what old resistance, new support on the short target at 21,360 gives us if we indeed pull back that far. Let's take a look at the YM. This is the E-mini Dow Jones. It continues to trend upward, battling with the high of the candlestick before the 20-year auction. Look at how it rejected that opening range. I want that color to be white. It rejected it quite soundly, so the short still looks like 42,430. And we are now, whoops, I need to move this on a measured move perspective. We've got 42,556 above us. We have, like this number down here, 42,196 below us. Trend up, momentum up to flat, but we do have a peak where we have a high, a low, making a lower high. I do suspect we come into the move that's sitting around 42,196. What if we don't? What if we hold this edge at 42,279? That's also a fair buy zone. All right? So just watch your risk. That's all that matters. Dips are still buys across the board. Let's take a look at Bitcoin. Looks a little bit different than the indices, right? Sitting well inside of its opening range all night long. All night long. Dipped below it, but immediately recovered. Look at this trend line. This range, it's automatically built if you're interested. This is a zigzag channel with settings. It's pretty nice and very objective in terms of what it's drawing. And it is telling us that trend is down. Momentum is flat, meaning we would have sideways motion. The largest volume candlestick to the north or largest volume in the near term, has a wick up here at almost 111,000 and a valley low edge of 109,749. That means the buyers that got involved here are now on the back foot. So what they are looking for is the next area of frontline support. And if we go back to the next highest volume candlestick, we will see that it is this candle on May the 23rd. Now, it came into the wick of that candle and has bounced. What is trend? Down. Momentum is down to flat. My suspicion is because of this motion, as long as we stay below 109,700, we are likely to drift into the lower implied volatility move of 107,697. If we break above 109,435, we'll likely fill the gap that brings us right into the edge of this big volume candlestick. And if it breaks up over that 109,800, we'll very likely see the upper edge of the implied vol move, and that is 110,653. Let's go to oil. Opening range for oil, would you believe? Did I move to 2? Wait a second. Let me double check to see if this is in roll. I don't understand why I don't have this sitting here. 2 seconds. 146. Oh, okay. That is the right one. Let's change this. So sorry. Thought I did this. Opening range very tight. Must have gotten super excited about Bitcoin or something. Where's that opening range candlestick? 2 secs, folks. Hate that. Hate that. Opening range candlestick. Okay, so here's the opening range candlestick. Trend is down. I set these volatility measures up and forgot to move the opening range event. We've got long action to the north. We've got an OPEC meeting on June 1st. What is this? We are in a range formation, no doubt about it. Could we get to the top of the range where the implied volatility move is? Yes. What is trend? Flat from the moving average perspective. The zigzag pattern says we have a downward pressure event into support zones. Lower edge of support yesterday gave us a really nice buy zone. Today, that implied vol has moved a little lower. The weekly implied volatility move is still around $60.20, right? And so we are going to keep our eyes on that. The implied vol move for the day is $60.19, just a bit below it. Upper edge of the move, $61.90. And we've broken both edges. We've gone above the opening range, below the opening range. Why is that to be expected? We've got a flat moving average. Yes, we are making high, low, lower high, lower low, lower high, lower low, wick that continues lower to a lower low. So this is what a sideways moving average will look like for us. What's momentum? It's beginning to crest north. Okay, so we have a buying candle. That's, check out the top of the buying candle, just rejected that zone very cleanly. Let's change this. Let's make the stroke really fine. Let's make it that color. Okay, this 1 hour candlestick of positive pressure comes right into the resistance zone. The low of that candlestick, interestingly, gives us a pretty solid area of support. And so we will continue to look at where these volume candlesticks go. What's the trade here? This one's hard because we have a flat moving average. We have the potential to move up. Today is what? No, we had a holiday on Monday, so we don't get the EIA report until Thursday. And so what's happening? We have higher lows. We have 2 higher highs. My thought would be dips would give us a buy zone. And that dip event, my suspicion, let's go to the next edge. The dip event could easily be the same region at $61 that we saw prior. We hold that 61. It moves into $61.78, back into $61.90. So I'd wait for the bullish pressure event. The low of the prior trading day's Globex Open is 61.40. Traders are trying to hold that. If you want to get aggressive and do that, you can. Me, I don't love it so much. I really don't. I mean, I really, really don't. I would rather wait to the base of the opening range and give myself least risk and the pressure event. Otherwise, I'm going to trade the short up at 61.90 if it fails. Gold is in rollover, so we're going to go to the GC3 contract, holding a floor. It's up in the pre-market. Tight opening range. That means it broke above it and below it. More than likely, you'll see that happen. Implied volatility moved to the north, $3,341. Implied volatility moved to the south, $3,300. What is trend? Bullish. And we can see momentum being a bit bullish. We are under the moving average, though, and that's going to make a difference. So what should we see? Deep dips coming into buy zones. Where is the highest volume candlestick? Have a look. It's right here. This is where the traders are trying to bounce. I have added this observation for us to have a look at so that we make sure that we're staring down wide angle trades and trying to understand what the broad market is doing and where the traders have been positioned on high volume events, right? If we lose $3,320, $3,319, I suspect we come into these lower edges and have a look here. That lower edge also gives us a support action event that we can see at 33.08. So that actually might be where the bullish action moves. All right. Again, trend slightly up based on the zigzag. Momentum is bullish, but we're sitting underneath a flat 63 moving average. That gives us a cross current of motion. We need to be careful about that. In general, deep dips continue to be buy zones for gold, as well as the broad market. Let's go to SPY. All right, very tight opening range. This is 4 a.m. candlestick. Momentum flat to negative, trend flat to negative, both with the zigzag and the formation. So it shows here for the SPY that bounces could be sell zones as price action recovers. Where is the high volume event? It's right here on that 21st. And that's where we are stalling out. Should we break to the north from here, the next move is 593, and then we've got a gap fill potential into 594.80. What's the trade, right? For me, the trade would be, I'm going to watch for a failing event at this 592-ish area. I'm going to see if it can come back into the opening range. So that's the quick short to fill the gap. Overnight inventory is somewhat long as traders have moved in. Pullbacks still look like buy zones. Sometimes the pullbacks are deep, but right now the 63 is holding as support, even though it's negative. And so my suspicion would be a retest of the lower implied vol move, and that would give me 583.40 as the range. Now, let's say you want to go long. Ideally, the top of the opening range at $590 would be the buy zone. Target 593. We're in the midst of it right now, so we could wait on this 590 to position ourselves long there. That's always, I mean, I like doing that. I really do. I like waiting for the low edges so that my risk is managed. What do we see below? Again, low implied volatility move on the day target, 585. On the north end, 593. All right, and there's heavy congestion here, so you're going to watch it move above that, and then if it loses the edge, we've got more action to the downside. Let's finally look at the Qs. This is, of course, the NASDAQ ETF, the QQQ. Opening range, also very tight. Trend is about flat. Momentum, about flat. I think traders really are trying to figure out what might be happening here with Nvidia. I am going to guess it's a nothing burger because things have been moved together, but we could have ourselves a pretty nice trade. We'll talk about that at the Benzinga midday Moneyball report. We'll see what happens there. Okay, so that being said, where is the highest volume candlestick? It is this. Take a look at where the chart stopped. Right at the top of that edge. The bottom of the edge is $513. Could we come back there? Potentially, right? Potentially. Right now, however, we are holding the low of the opening range, and that number is $520. So pull back to $520 gives us a nice buy zone up into the top implied volatility move. That's 524. I don't feel warm and cozy about that. If we breach 523 and hold it, yes, I would raise my stop into that and see if it can get to 524. Lower edge of the implied vol move is $516. Weekly formation, well below it. The weekly implied vol is well below it. So we are really trying to track into $526.73. All right, that's it for me, folks. Hopefully you made sense. Hopefully I made sense. And then you made sense of what it is I've written down today. We are inside of a big pocket of sideways motion. We have recovered the tragedy of the 20-year bond auction. And so could it mean that we're going to reload and go short again or break to the north? The only thing that'll tell you that is how price behaves. Okay, so if you're looking for the breakout, you can do a buy stop, which puts you in the market at the trigger event. Or if you're thinking it's going to move down, I'd wait until we lost 520, maybe 519.95, and then you can do a sell stop entry, which puts you short into the base of the formation. All right, good luck trading today, everyone. Take care.